We also have Scott Bauer this afternoon. He's the CEO of Prosper Trading Academy, joining us for a look at a few that he's got his eye on. Scott, welcome to Midday Movers. Let's begin with welcome, Scott. Let's begin with banks. As rates have been coming off, well, so have some of the bigger names. Looks like you've got Citi and a couple others on your radar today. Talk to me about what you've been seeing there.
You know, the one I like, or I should say dislike the most, is Bank America.
Okay.
Citi, I'm fine. Citi, I'm fine with. JP, I'm fine with. More, you know, some of the bigger ones. Bank America, though, to me, from a technical standpoint, looks a little troubled here. It's sitting now right at the 50-day moving average, like literally almost on the tick as we speak right now. And I'm concerned that we may see some selling pressure coming in there in Bank America. The other ones, obviously, you know, with rates coming down out of the 10-year at 160, like you mentioned, you know, that's the low that we've seen in a while here, certainly putting some pressure on some of the bigger banks, but I think those guys are going to be fine. You know, the earnings reports that we saw were healthy. Guidance was okay. Bank America, though, to me is the one that I'm a little iffy about here.
Okay, then we're going to keep an eye on these results. I want to pull that 50-day moving average up in a minute, but first, if we could take a look at some of the numbers here that we're going to be looking for in terms of earnings. Scott, you mentioned you're going to be dialed in. They're looking for, well, they came in, I should say, prior at 74 cents, estimated at 68 cents, revenue at 22.30, 22.01 billion estimated. But, you know, I want to take a look at this chart because Scott mentioned the 50-day moving average, and I think this is a great spot to keep an eye on this one right now. This is an area where, again, obviously testing a key support here. You can see the 50-day moving average in the blue line. This is one of those areas, Scott, where I always say if the bulls are in charge, and it certainly seems like they have been since that August, the September lows that we saw in the rally that's now brought them back to that 35.72. If the bulls are still in charge, Scott, you'd expect them to step up at this point, but talk to me about why you're not so keen on some of the other banks.
Well, you know, you just look at rates here, and we've seen this range of the 10-year over the last, 6 months, 8 months or so, being pretty much down 155, 160 on the low end where we are right now, up to about 190. And, you know, this is going to be an inflection point here. If rates continue to tick down here, it could spell a little bit of trouble here for the banks. But again, I think some of the big guys like a JP, even a Goldman Sachs, the banks that have significant trading revenues to them, I think are going to be fine through this.
All right, Scott's talking about rates and how they have been holding lower levels. We actually saw the TNX and TYX inch lower today as well. Yep. Scott, while that may be hurting the banks, I'd imagine that's helping the home builders. You've got your eye on Lennar, DHI, and Pulte. Talk to us about what's playing out there. Look like new highs recently for a few of those names.
It's almost the perfect storm for a lot of these home builders with rates the way they are, good guidance, the consumer's still looking so healthy, so strong right now. So yeah, you look at a Lennar, you look at a Pulte, you look at a DHI, and you know, I don't want to say it's off to the races, but technically they look really, really healthy, especially Lennar. Yeah. Lennar in the option space here, there's been a lot of call buying, Ben, especially prior to earnings here. This stock is almost back to where it was just over a couple years ago, approaching those highs from a couple years ago. So I really like Lennar. DHI is another one. If you look technically, has been hovering and holding above that 50-day moving average. So the bulls came in there and supported that one in DHI, much like, you know, kind of what we were talking about and looking for with Bank America.
Scott, with home builders, you've got to like rates lower. Another thing that you've got to like is if we actually do see wages start to increase, that would in theory promote more buying, more for the home builders potentially to the upside. But let's talk about one thing that actually could derail some of this movement to the upside. If the labor market were to start to show any signs of weakening, any softness, is that potentially the one fly in the ointment, so to say?
It is a big one. It is definitely a big fly in the ointment. You know, those in wages really kind of control where the consumer is going to be spending, and obviously trickles down to the home buyer. So yeah, but you know, right now so far, everything looks to be pretty good here. So I think for the near future here, the near future being, you know, the next 3 to 6 months, to me, it's clear sailing ahead.
Yeah, Scott, it'll be interesting to see if we dodge another bullet here. It seems like every real tense concerning economic, whether it be globally here or domestically, concerning event that comes up, whether it be through transparency or some sort of off-ramp, we've managed to find one, even today with the WHO, the World Health Organization, holding back in terms of declaring that the coronavirus an emergency, a health crisis. Obviously, that's going to help, or at the very least, lift investor sentiment into the weekend.
Seems like a Teflon market to me, Ben.
Yeah, sure does. Scott Bauer joining us here this afternoon, helping us take a look at a few stocks he's got his eye on, talking banks and home builders. He is the CEO. We're talking the CEO of Prosper Trading Academy. Once again, Scott Bauer.